This company that's going to IPO has one of the craziest profit jumps that we've ever seen. Keep watching to find out what they do. And of course, guys, now what we say should be seen as financial advice. If you want the sort of advice, please speak to a professional. Now, guys, if you're really interested in building a 6 to 7 figure portfolio, we've got the perfect solution for you. Head over in the comment section or the description to sign up for our free masterclass where you can get all these proven steps to achieve it. All right, Jonathan. So we always like to start off with what they actually do, right? This company is called Edelteq with a Q. I kept thinking it was a CH.
Yeah.
And yes, so no surprise, they're probably in tech.
Yes, exactly.
Ish, quote unquote. So yes.
So yeah, this is their historical businesses and there's like an evolution to it. So in 2004, they actually do those very low tier and low margin business, which is manufacturing PCBs.
Yes.
Your printed circuit boards. So if you actually study companies that does this, right, you notice that their margin is actually very little to non-existent. Yeah, put it that way. And then in 2006, I think because of these CEOs' expertise and also the management teams, right? So they start to expand and design IC burn-in boards. So these are more like a complicated circuit boards. It's much more higher end than PCBs, just your PCBs. So that one, when you get more complicated product, definitely the margins will be much more higher. And especially if you are the one that is designing it. So yeah, that actually gives them a much greater revenue and also profit.
So to simplify, basically, they produce the boards for burn-in chips to be placed on them.
So they actually have like a something like that. There's a board, and then for you to place your IC on top,
right?
For them to do testing,
board, right?
Yeah.
Okay.
Yeah. So, but then I'll break down the product in the next later slide. So, and then slowly in 2018, they actually start to do some tradings as well because they got all of these materials and supplies. And yeah, there's another business segment. And in 2019, they start to expand into ATE, which is your automated testing equipment. Those are like your Vitrox, your Pentamaster, your Greatech, and all those. Yeah, they start to do these kind of services also. So that is their evolution. And so where are they placed in the value chain, right? This is from their prospectus, and they mentioned that they are actually part of the engineering support companies, which is below offset. So what they do is that, one, they provide ATE equipment, your test equipments, and also they roughly help you test your IC's durability and also the lifespan, because they do this burn-in testing for these companies. So yeah, it's more of a low back-end kind of like semiconductor value chain. Okay, so this is a much more, I would say, a more explanation on their business. So if you want, you can pause this video and read everything. But basically, there's 4 major business segments. So the first one is they design and assemble the IC burn-in boards. And also they supply PCBs, but then this supply of PCBs, they actually outsource it. Basically, they hire a subcontractor to do this work. So later in the next slide, I will talk a little bit about that. And then basically this is the final product you can see here. And then the customers that they are actually serving are your IDMs, integrated, I forgot what's the D and M already, but it's, you're basically the top end value chain of that semiconductor value chain, and then your offsets, and then also they supply and refurbish IC. So not only they make that IC burn-in boards, they also help to maybe even fix or maybe even replace once these IC are defected. So that's a value-added services in their business. And then in 2019, they expanded in their ATE business segment. So ATE, I believe you guys know what it is. Basically just a machine for some of these OSAT company to use. And then they also do this refurbishment of services for ATE as well. And then the last one is basically trading of stuff. Yeah, and then we go to, so in the PCB, notice that I mentioned that PCBs, if you are making it, it's actually a very low margin because you need a lot of manpower to actually like assemble the transistor.
It seems like what's the word? They outsource
it.
Right?
Yes, correct. So they outsource this low margin business to a third party. And then right now you can see this is the amount of subcontractors they have. So they have like 8 subcontractors of PCBs, 13 subcontractors of internal precision parts, and then the sheet metal is 5. And then, so you notice like in 2019, they rely a lot on third party. Later I'll show you the number. And in 2021, they actually start to cut down a lot and they do it in-house. I believe because they do it in-house to get, there's a way for them to actually make more margins or even profit in it. They figure out a way. So this is the cost of sales. You can see that subcontractor cost is actually the most in terms of their cost of sale. So it's about 81%. In 2019, they spent about 7 million. But you notice these figures start to drop bit by bit. That's because they start to do more things in-house instead of relying on third party. But it's still quite a big amount. It's just a 7 million drop to 6 million.
Well, the cost will appear somewhere else.
Yes, exactly. And then if you notice, they actually have more assembly material, parts and trading of goods consumer. That's about 35%. Last time it was like 10%. That's also because they kind of buy these materials by themselves. Yeah. And then there's actually a very small amount is from direct labor and other charges. Okay, so this is a more HD version of their product and services. So if you notice this dotted line, these are the products that they actually make. So this is your IC burn-in boards. They help to place that IC on top of that board so that when you can do testing, it holds the IC and then they can do those testing easily.
For those, just to pause that, for those who are unaware of the function of burn-in testing, is simply to stress test. It basically increase the temperature of the PCB and see how well it can function under high temperatures.
Yes, exactly.
And of course, this is important because electronic components tend to generate heat, right? So if you don't stress test it,
exactly.
You may not.
Or how I actually visualize it, is like literally I put like a fire and then like burn the IC.
Yeah, but I think it's more like an oven, right? They put it into an oven and they heat it up.
Yeah. So
microwave, right?
Exactly. So this is their ATE products. ATE for wafer inspection, tape and reel machine, and then BIB inspection. And then this is another IC BIB board. So interesting is that they actually disclose, I'm not sure whether this is intentional or not, but they kind of say the unit price per machine for their ATE.
Okay, interesting.
So yeah, usually because most ATE companies won't do that. They will actually hide, this is like, they say it's a secret sauce. So they won't really simply disclose. But then I noticed that when I was studying about that, one of these unit inspection machine is actually cost about 1.4 million. And then this auto reel taper, I believe is this one. They sell it about 860K. So that is actually a very crucial information for you because you can
it's
find
expensive.
out, it's expensive, and also you can know that how many units do they sell each year, or maybe it's a good question to ask the management.
To clarify, the AT one is more of like a service, right? So people give them the chips, PCBs, they test it.
No, ATE is the machines.
They sell the machines.
They sell the machines.
Okay,
they build the machines on and all this. So yeah. And then this is the revenue by segment. I mentioned the 4 big segment, right? Which is your design and assembly of IC burn-in boards, the refurbishment, and also the ATE and trading. So one thing you'll notice that the ATE, they start to rally a lot. They expanded this business segment quite a bit. So if it actually more than 3x. From 1.5 million to 5.2 million. So right now it contributes about 21% of the total revenue. And then whereas the other business segment is still quite similar, more or less the same. And then because they do more of this ATE, right, their profit margin actually improve quite a bit. Yeah, I'll show you guys later in their financials.
But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. If you're interested, you can apply it in the comment section or the description.
So, so this IC business segment, right? If you notice just now, this top part, they actually merge the design and assembly of IC burn-in boards and supply of PCB together. This is the further narrowed down version, and then they break down into IC burn-in boards and PCB. So you notice that PCBs, the revenue generation is kind of like dropping a bit, and then they kind of do more of these high margin product, which is the IC burn-in boards. So that one actually grew quite a lot from 2.7 million to 8.2 million. So that is a very impressive growth. All right, so this is the gross profit margin by segment. So you notice, right, almost all of the business segments margin is very high. It kind of akins to tell us like this company might be one of the market leader in this space for this IC.
Right.
If you look at just pure gross margin, like see over 40% in financial 2021 for their IC burn-in boards and supply of PCBs, which is quite insane actually. And then their refurbishment services also is a very high margin business. So it grew from like 26% to 68%. Yeah. ATE, I mean, if you look at other ATE guys, their margins are very high. And then this one thing caught my eye is that the trading of spare parts, because trading, right, you kind of expect them to be a low margin business.
Yes.
Kinda lah, because you just buy the product and then you just sell it at a small percentage. But then their margins on this is like more than 67%. Yeah, so this is actually interesting information that I just learned about today. Yeah, so when you trade an IC, right, your margin is actually very high. Okay, so this is the revenue by geography. Initially, they do a lot of sales in Malaysia, but recently they actually managed to acquire MNC company called Skyworks Solution. Yeah, so that one, they are actually located in Singapore. So you notice that the Singapore version revenue contribution over there is much more higher right now.
Yep.
About 15.77%. So yeah, that's pretty good. And then this is the customer profile that they actually show in 2006 to 2017. So you notice some familiar names. One is Yellow, in 2015.
Yep.
And then the recent one is Infineon. So yeah.
So I would assume customer C, A, B, C, D would probably be bigger names potentially.
Potentially, but then it is, when I was trying to find the profile, it's actually pretty difficult because most of them are not a public listed company. They are more like a subsidiary of that particular holding company. So yeah. All right. So this is the revenue contribution by major customer. You see that there's a few things that are highlighted. So number one is actually Infineon. So you notice that they grew their revenue aggressively from 2.8 million to right now 8.4 million. So that's about like a 3x in over 2 years. Customer A also has been with them. It also grew 4 million, 5 million, and then this one is 6 million. Customer D actually grew quite a lot. So from 685K to right now 2 million. So
big jump,
essentially most of their major customers are getting more orders from Edelteq, which is I
mean, they're giving Edelteq more
business. So which is very, very interesting. It's like a linear growth rate.
Yeah, I mean, it's real, right?
Yeah, exactly. Okay, so this is just to sum up for their business efficiency. Basically, I'll say it's quite an okay credit terms, although it's kind of like slightly overshot. I believe for tech, the maximum is about 120 days. I believe. So they are doing quite well within that period. So right now, it's actually, they managed to capture more of these cash collection, which is pretty good. But then these payables actually reduce.
Yeah, that's only about 15-20 day differential between the receivable and payable days, which is not too bad. I mean, all you need is some cheap financing or some bank rolling for about 20 days, which is a month. Right?
Exactly. And then if you notice, right, their inventory turnover is very little. That's because they don't really hold much raw materials. Majority of the things that they hold are finished goods instead of raw materials. But it is
increasing quite a bit, right?
Yes, exactly.
So this is, I think, in preparation of getting bigger orders, more clients.
Yes.
One would expect this.
Yes, exactly. All right, so this is the competitor, which I wouldn't really go through much, but basically, Edelteq, if you notice, Edelteq is the highest among everything. They have the highest margin, I believe the most profit also. So this tells them that they kind of like one of the leading IC burn-in boards manufacturer. And
I mean, like when you look at burn-in testers, there are not too many of them in Malaysia. So of course, KSM is one of them. Can we consider Elsoft? Question mark there. But yeah, it's good to have them. Although I am still a little bit cautious, like why are they so much higher than the rest?
Yeah, exactly. So this is something that you may want to find out yourself, whether this is really real or not. Okay, so business aside, now let's take a look at their team. Now, this director, which is Mr. Chin Yong Kyong, who is the group CEO of Edelteq, his salary is about 538K. So this one, I believe, is around January 2022's figure.
It's about 5%, 6% of profit.
Yeah, around there. And then he's currently 52 years old. But if you look at his job experience, right, it's very interesting because you notice there's a very lengthy, experiences.
Yes.
It's like, I believe on average, he works in a company 1 to 2 years or so.
But the key one is Agilent and Philips.
Yep, exactly.
And he's ex-Me Technovation. What do you know? Right? So I think those who come from Agilent tend to have pretty high standards.
Yeah.
Of course, you go to Philips as well, right? And that's where the LED, I would assume LED side of it.
Yeah, and thank God actually he kind of like worked longer
at
Agilent and Philips instead of these other random.
He's probably like hopping around, get a higher salary,
Yeah, and maybe even trying to learn some new skills.
Yeah, but the key is that the fact that even though that there's a lot of them, but spending 8 years at Agilent, I think that gives some credence, right? Some credentials, rather.
Yep. Right, so that is the group CEO, and then we have here the executive director, which is Mr. Kong Chi Siong. He's also part of the substantial shareholder and promoter. So his salary is around 224K per year, and then he's quite young, 48 years old. And yeah, he's actually one of the co-founder of this subsidiary of Edelteq, which is ETMSB.
Okay.
Yeah, that's
for a while only. Yep.
Yes, exactly. So yeah, basically this is his credentials, and then we have here the business unit director, which is Mr. Chin Yon Fong. Basically he also bought shares quite early on from Edelteq subsidiaries.
What I like about seeing a lot of this so far is that these guys still have at least 10-15 years ahead of them, right? I think that's always good. I don't like if they are in their 60s and their IPO.
Yep, exactly. A succession plan. Yeah. Right. So this is something that you also want to know, which is the moratorium. So after IPO, right, this is each of their shareholdings. So obviously the group CEO holds about 44%, followed by 20% and 8% by Mr. Kong and Mr. Chin. But if let's say after the 6 months moratorium, they can actually pare down their shareholdings if they want to lah. And then it follows by year 2 and year 3, you can see that the lowest they can actually go is around like 12%, 5%, and 2%. So this is something for you to know lah on the side. Okay, so this is the employee. Now this is very interesting because they don't really have a lot of engineers. I was surprised actually. I thought it's going to be a group of like 100, I don't know, maybe even 50 lah, at least 50 engineers in the company. But this company only has 13 to do. And then they generate about more than 7 to 8 figures of revenue every year. So yeah, that is actually very insane. And then if you look at the attrition rate, which actually I was very grateful that they actually put this out. Attrition rate actually is kind of like increasing right now.
Yep.
I believe it also is because the staff cost may be not too attractive to them.
But I mean like, a lot of it is production.
Yep, exactly.
Yeah.
Yep, about 17 people. Yeah.
Engineering division is like what? 3, 4, 7, 7.
Yes, but then I think some of the production or maybe management is part of the engineer team.
Sure.
Yeah. So they kind of say there's like 13 people as an engineer lah, and they try to hire like I believe 8 more engineers after IPO. All right, so we look at the business and team. Now let's have a look at the numbers.
All right, guys, enjoying the video so far? If the answer is yes, remember, like, comment, subscribe. And as far as comments go, if you don't like the video, do let us know as well. We always take all sorts of feedback as long as they're constructive.
Okay, wow. The first thing when I was looking at these numbers, I was pretty impressed. Because not only revenue is like growing a lot, you see like their profits and everything is like, it's shooting, it's like a rocket ship lah.
That's right.
A linear growth rate. But then if you notice their administration expenses and also selling distribution expenses has been kept quite a similar pace. So it's actually very interesting. They are growing, but their expenses are keeping the same. Yeah, so that's a very interesting thing. And then the margins also has been improving quite a lot.
I mean, your cost is fixed, right?
Yeah, exactly.
And your orders keep coming in.
Yeah, so it grew from 30% to 50%. And then because also they got like pioneer status, I believe until December 2024. That's why their tax rate, they don't really pay a lot. And hence the profit after tax is almost similar to profit before tax. And yes, right now they're in a net cash position.
This is before IPO money, right?
Yes, exactly, before. So I think the money that they're going to raise is, I'm not sure whether there's like part of it's going to be for bank borrowings. I believe there's a little bit, but majority is going to be for R&D, construction, and buying new machines.
So they are roughly about 3 million net cash to 2.5.
About there, more or less.
Okay.
So yeah, it's pretty healthy. And then we have here, which is their cash flow. So cash flow also has been doing very well. You can see the uptick by quite a lot. And then recently also they spent a bit of capex over here. I believe because they bought a leasehold land in Batu Kawan. They are planning to build a factory over there. And they also mentioned that they are going to be a dividend payer. So they're going to pay like 20% payout ratio against profit. So yeah, expect this company to be a dividend payer lah. And then, so this ROIC is very interesting. And then I use the return is basically from their earnings before interest and tax. So you notice that there's this jump, right, about 158%. Now, why is there a jump in this 2020 segment? Because they actually have two interesting things, or actually just this one, which is your contract liability. So what this contract liability is, they actually build or they actually collected the payment before the goods and services was delivered to their clients. So that was about 2.3 million. I'm not sure whether this is pure cash or paper. So, but I think it's going to be paper.
Right.
Likely it's going to be paper because he didn't do any services to them, but they managed to get this amount of money. I'm not sure
they
whether
record the sales first.
Yes, exactly. Right. So I'm not sure whether is it because in 2019 they got discussed and then they got closed the sale or not. Sure. Probably is, but then don't expect this company to make 158. Right. Yeah, it's a once-off. That's why I see 30%, then it drops to 40%.
Yep.
So pretty interesting thing. Okay, this is other fact for you to know. So this is the IPO proceeds, which they haven't announced the numbers yet because we're still very early. They're still in they haven't really go through. They're still in a process of filing for this in Bursa, Malaysia. So the stats is not there yet, but basically this is what they're going to spend on, which is your construction of Batu Kawan factory. They're also going to be paying off some bank borrowings for this Batu Kawan factory. R&D also they're going to spend working cap and listing expenses, which is a very standard practice. Yes. All of these proceeds. All right, so right now, if let's say they manage to build this Batu Kawan factory, right, they are going to be expanding their annual capacity by quite a bit. So if you notice, right, the design of IC burn-in boards is going to be up about 30%, going to increase 30%. PCB is also 30%. But interestingly, these dicing blades refurbishment and PCB gold fingers is going to be up like 400 and 100%. So this is their expansion plan. And this is the catalyst that I kind of foresee maybe for Edelteq in the future. So one thing is that they want to expand their ATE business, which is those high margin business.
Yep.
And then also their IC burn-in board expansion also is kind of like a high margin business. Yep. Actually, essentially most of their business is very high lah. So it's a good thing if they're expanding this to capture more revenue and also capture more profits. There's a factory expansion which they are going to increase to 43.5k square feet in Batu Kawan factory. I believe right now their square feet size is about 7 to 18k square feet, which is quite small. So they are going very big. And then just now the previous slide I mentioned about production capacity increasing, and also they're going to be recruiting there's like 13 engineers and 10 technical personnel for production, which is quite a lot. And they expect everything of this to be done by March 2024.
Sure.
So that is the catalyst for you. And so this is the final takeaway. It is this margin sustainability, because they have this position as though that they are the market leader, right? So I'm not sure what is the barriers to entry to this. Of course, you can say like switching costs and whatnot, right? But I foresee that maybe some companies can replicate what they do. Yeah,
I'm not sure if it's necessarily the best thing for them to report such high margins. I was actually just watching video on Amazon and how actually their retail business is actually quite profitable, but they deliberately park like expenses from other areas to put it under, so they push the margins down so that it doesn't alert competitors. But not quite sure why they're doing this, especially when if you look at other companies, they're basically a lot lower. And
and then followed by the transparency of ATE selling price. This is a huge news for investors because usually people wouldn't really simply disclose this because it's their secret sauce. Then the third is the CEO's working background, which is pretty interesting. Although there's he hop a lot, but then he works in Agilent and also Philips, which is quite a reputable company, so that's pretty good. But the fourth point is that I'm not sure whether this is going to be a family business coming soon because the CEO's son is currently working as an engineer in this company. He got hired, and then the wife is a landlord for one of these factories. Which they get RPT, related party transaction. So they're kind of like getting money, right pocket in, left pocket out, that kind of thing. And then the fifth thing that you want to know is that they are such a profitable company. Their growth is going very good. They have cash, everything. So why are they going public? So this is a one big question mark. Of course, you can say that to get financing.
Usually is to expand and for profiling.
Yeah, exactly. Right? But I think that it's I don't think they need to go to IPO personally because they got all the money that they have and also the growth rate, assuming it is growing at what they're growing historically. Actually going IPO is I should be a secondary option instead of a primary option.
So I'm not sure you have the valuation math here, but basically they are right now at about after tax earnings of 8 million. Assume it's sustainable. You're looking at roughly 200 million ringgit in market cap valuations when they IPO, assuming a 25 times earnings number, which is already quite generous. If you think if it's 20 times, then it drops down to 160 million. And then at 500 million shares, it's going to be a 40 cents share, if my math is right. 200 million more market cap on 500 million shares. Look, in the past, IPOs have done really well in Malaysia, especially when they're in the quote-unquote tech sector. So I won't be surprised if this company actually pumps a lot. That has been, I think that is almost 100% of the case.
No, 80% lah. 80-85%.
Okay. Yeah. But is it 100% of the cases when it comes to tech related?
More or less 80 to 90%. I mean, it's that high.
They already use all the buzzwords, right? ATE, burn in, IC. Once all these, people don't really care about the details that we share. We just IC, burn in, okay.
Yeah.
So that's what I think is likely to happen based on history.
Right. So that's it for the Edelteq's IPO breakdown.
Yeah, and we actually have also looked into many other IPOs and not just IPOs as well, right?
Yes, exactly.
In our FIRL Pro program, we actually meet management, in private, and sometimes we do that because they're a lot more comfortable sharing in private.
Yep.
So we take some of the notes and we actually, give it to our very exclusive membership on FIRL Pro. In addition, of course, we do research reports as well, so that we can shortcut your research journey into finding investments that suit your investment profile. This has been the performance so far. March is worse off than February, sadly. But, we are still, most of the companies have actually done well. Companies that we cover and put into the portfolio, as well as the Telegram portfolio as well, which are companies that we don't do research report on, but we think can have some sort of short-term catalyst that we want to share with some of our members. So far, so good. And if you just want to test it out, you're not quite sure whether it's for you and you need more information, you want to get a taste of what it's like, head over to our free sample segment, try out some of the reports and see whether it suits you. And if there's nothing else, thanks for watching all the way until the end. Always appreciate the support. Come binge on some of our other videos. I think definitely will suit you as well. And can't wait to see you in the next video.